From the best neighborhoods to the local secrets, we're diving deep into what it's really like to live, work, and play in Boca Raton. Subscribe, let's connect, and get you home.
There is a quiet migration happening in America right now, and it's moving more money than almost anything else. Last year, hedge funds, family offices, and some of the highest earners in the country packed up their stuff and left New York, New Jersey, and California. And a huge share of them landed right here between Boca Raton and West Palm Beach. Some of them will save 5, 6, and even 7 figures a year in taxes alone. And some of them are going to realize to a brutal surprise from their old estate. A tax bill they thought they already escaped. So today, I'm going to show you the real math, the real numbers, and the honest version, not the marketing brochure one, of what it actually takes to move your money and your family down here in 2026. This episode, it's gonna be touching taxes and residence law. It is for general education purpose, not a legal or tax or financial advice. The numbers are current as of July 2026 and are illustrative ranges, so you need to verify the specific situation with a licensed CPA or attorney. Welcome back to the channel. I'm Marc, a licensed real estate agent serving buyers and sellers from Pompano Beach all the way to West Palm, and I specialize specifically in homes over $1 million. And here is why this topic matters to me. I grew up in Buenos Aires, and before I planted roots in South Florida, I live in Brazil, London, Chicago, San Francisco, and Orange County. So I know exactly what it feels to move somewhere new and try to figure out the roots from the outside. And the people moving here right now, from New York, from New Jersey, California, they are making one of their biggest financial decisions of their lives. Half of them are getting their advice from someone who is trying to sell them something. So let's do this the honest way. Here is the plan. First, we're going to be talking about the migration itself, who is actually moving here, and why Palm Beach County is now called the Wall Street South. Second, the real tax math. Income, capital gains, and estate tax with numbers you can actually use. Third, we're going to be talking about Boca versus West Palm, because once you decide to come, you still have to decide where you're going to be landing. Fourth, how you actually become a Floridian in the eyes of the law. And fifth, my favorite, the things nobody tells you, the traps that could cost you quietly most of your money. If that is useful, do me a quick favor and subscribe so this reaches to other people making the same move and hopefully helping them along the way. Alright, let's get into it. So let's start with what is actually happening right now. Florida has become the #1 destination for people relocating inside of the United States. Again, it's not going to slow down. In just the first half of 2026, out-of-state driver's license exchanges in South Florida account for 17% jump, with the top 3 states are specifically New York, which is around 9% today, New Jersey around 8%, and California up 16% year over year. Now, here's the part that nobody tells you. This isn't a fact. It's not just retirees anymore, and it's not just snowbirds either. It's companies, because just in the first half of 2026, at least 4 major companies moved their headquarters to South Florida. Planted, Trinity Investments, GFL Environmental, and D-Wave. And the finance world, it has been quietly rebuilding itself up here for years now. More than 120 major firms have opened offices or relocated to the Palm Beach, Citadel, Goldman Sachs, BlackRock, Elliott Management, Point72, just to name a few. The country is home to somewhere around 20,000 finance companies employing over 120,000 people. And more than 300 hedge funds and private equity firms are also calling Boca and Florida home. One flagger, one West Palm, over 2 million of square feet of Class A office is under construction. So why does that matter for you as a buyer? Because this is what a structural shift looks like, not a temporary one. When the jobs move, the families follow, and the housing demand doesn't reverse. Okay, let's talk about the reason most people even start this conversation, taxes. And I want to give you real numbers because you will save money. It's useless unless you have actual numbers. New York top state rate is about 10.9%. And if you live in the city of New York, the city piles on another 3.876. So a top earner in the city can be paying north of 14.5% on their income before a single federal dollar. In Florida, it's zero. No state income, none whatsoever. What does that mean in dollars? For a household earning $500,000 a year, moving from New York to Florida is roughly a $38,000 savings per year. A New Yorker earning $300,000 is often paying about $20,000 a year in state income tax alone. And in Florida, the number becomes zero. Even at $150,000 income, a Florida resident keeps around $14,000 more than a New York City resident every single year. Now, the big one, capital gains. This is one that changes lives. New York taxes capital gains as ordinary income. There is no special lower rate at the state level. So if you sell a business or a big stock position while you are a New York resident, watch this. A $10 million gain generates roughly $850,000 in New York state tax. In Florida, that number is actually zero. That is a life-changing difference for a founder or an executive with a liquidity event coming soon. And then there is the state tax, the one nobody talks about. Florida repealed the estate tax back in 2004 and has no plans to bring it back. New York still has one, with an exception of around 6.94 million, and a nasty cliff if you go over it on a 10 million estate. That is roughly 400,000 in New York state taxes versus in Florida 0%. Here is my honest caveat, because you deserve the full picture. This is not free money. You still owe federal taxes. Florida changes your state and local bill, not your federal one. And none of it counts unless you actually genuinely move to Florida, which brings me to two specific situations that matters the most. Okay, so you have decided to come. Now you have to decide where you're going to be landing. And Boca Raton and West Palm are two very different answers to the same question, even though they are roughly 25 minutes apart. Boca Raton is the family answer. As of May 2026, the overall median sits around 690,000. Up 30% from year over year. But in our lane, the luxury benchmark starts around 1.2 million. And the luxury median last year was about $2.19 million, up 9.5% from the year before, with homes moving around 33 days in the market. Boca is an A+ school district with walkable areas and a thriving downtown and some of the most established country club communities in the country, like the Royal Palm Yacht and Country Club, which is Deepwater, one of the most prestigious addresses in town, the Stone Creek Ranch with its 2 to 12 acres estate, the Addison Reserve, Boca West, Woodfield, Broken Sam, and the Polo Club. If you are moving a family and you want schools, space, and a private club lifestyle, Boca is probably your best answer. West Palm Beach is the Wall Street South answer. The median there is around 440,000, but don't let that fool you, because West Palm just recorded a single sale this year of $99 million, and it's being called the fastest growing luxury market in the country. West Palm is urban, high-rise, walkable to those new office towers, and about 10 minutes from Palm Beach Island. If you are the finance professional who wants to walk to the office and be on the water on the weekend, West Palm is built exactly for you. And just so you feel the momentum, at the top you have $2 million plus luxury tier. It's only about 18% of the transactions, but it's roughly 43% of the total volume of the market, and it's up 9% year over year. The high end is where the energy is actually taking place. So how do you actually become a real Floridian? Here is something a lot of people get wrong. moving to Florida for tax purpose is a legal event, not just a physical one. Buying the house is not the finish line. You have to change your domicile, your true permanent resident, in the eyes of the law. The cornerstone document is called Declaration of Domicile. It is a sworn statement under Florida Statute 222.17 that you file with the clerk of the circuit court in your new Florida county. That's your formal, this is my new home on the record. Then you stack the evidence. Florida law gives you 30 days to get a Florida driver's license once you establish residence. You have to register to vote here. You need to move your bank, your accountant, your doctors, your club, and your religious memberships down to Florida. And if this is your primary home, file for the homestead exception, which actually knocks about $50,000 off your taxable value, and just as important, it caps how fast your assessed value can raise year after year, which is currently sitting at 3% under the Save Your Home Act. You have to file it by March 1st. The last part only applies to your primary residence, not for a second home or a rental home. The thing here is pretty simple. The paperwork only works if your life actually matches. A declaration you sign but you don't leave behind, it's worth zero, which is exactly where people get into trouble, and that is what we're going to be talking about in the next chapter. The things nobody tells you. This is the chapter that saves you the most money. So stay with me. 5 things nobody puts in the brochure and you need to know. Number 1, Florida has no 183-day rule. People are obsessed about this number, but that test doesn't belong to Florida. It actually belongs to the state that you are living. New York and New Jersey have what is called a statutory residency. If you keep a place to live there and you spend more than 183 days in that state, they can tax you as a full resident, even if you have already moved to Florida, which means you can now owe 2 states' taxes in the same year. That's the trap. Number 2, keep a day long, and I mean it. If you are flying back and forth, a simple, straightforward calendar of where you were each day, back it up by credit card receipts, toll records, flight itineraries, even your cell phone location. In a resident audit, that log is the single most persuasive thing you can handle. A lot of good tax attorneys tell high-income earners to aim for 90 days or fewer in the state during the transition years, just to build a buffer. Number 3, your own house is the biggest red flag of all. Holding on to the New York apartment or the Jersey house is the number 1 thing that triggers a residency challenge. If you keep it rented to an unrelated person at a real market rate, or listed as a secondary or vacation property on your insurance, and make sure your Florida home clearly is the bigger primary home by size, by furnishings, and by the time that you spend in it. Number 4, and this is the expensive one, time your liquidity event. If you are going to sell a business or a large stock position, you generally want to establish Florida domicile before the sale. Ideally, a full tax year ahead. Selling while you are still in New York resident, you're gonna get to pay New York taxes no matter where you bought the house. The order of the operations here can be worth hundreds of thousands of dollars. Number 5, New York audits these moves aggressively, especially for high earners. They will look at where your doctors are, where your accountant is, your cell tower data, your credit card patterns, and this is not paranoia, it's just the process. So get a Florida CPA who does residency work before you move, not after. So here is the honest bottom line. This move can absolutely be worth it. The tax savings are real, the market down here is real, and Palm Beach County is quietly becoming one of the most important places in the country to live and work. But the savings only count if you do it right. And the home only fits if it fits your actual lifestyle. That second part is where I can come in. If you are thinking about a move to Boca Raton or West Palm Beach, and you're looking for a property over $1 million, reach out. No pressure, no pitch, just clear numbers and honest advice. You can email me or text me, or you can schedule a call using the link in the description. And one more honest note. I'm not a tax attorney, so before you make any move or decisions, sit down with a Florida CPA about your specific situation. If you text me, I'm more than happy to refer you to my personal CPA. I'm Marc Aras with Keller Williams. Watch the next video, subscribe and hit the bell, and drop your questions in the comments. I read every single one of them. Thank you so much, and until the next episode.